Most of the guys are younger, right? Probably living at home. I don't know. I don't really quiz everybody on what their living status is.
You should. I mean, you are
Before
a realtor,
we
right?
engage in combat, do you mind filling out this mortgage pre-qualification application? Speaking of mortgage applications,
Yeah.
What a show today.
What a show. Look at that.
If you guys are looking for a
kind
mortgage
of segue there,
and you're not sure who to go to, one of our guests today,
yeah, if you're confused, we're going to confuse you more.
Is going to be able to help you.
That's for sure. It's like, which one though?
Yep. Depending on what you're looking for, what your goals are.
I guess where you live.
I think they're all ready to help people anywhere in Canada. I'm pretty sure.
They are.
The mortgage business is national.
Well, these guys are all heavy hitters, but TK, I mean, what's going on out there? I mean, one minute I'm hearing that there's like bidding wars and the market's like rip roaring and what's going on? Like, this is crazy. And then now people are like, I think that's over. Feels kind of quiet again. What's happening from TK's perspective?
From my
on
perspective,
things?
I actually only have one active listing right now because everything else is sold, or sold conditional.
Yeah.
So I just have one little like property to really like understand the temperature of the market. I'm talking to my teammates and all that stuff, but I'm getting that secondhand. So firsthand in Whitby, a detached 2-bedroom bungalow on a 50 by 160 foot lot. Nice lot, single car detached garage, like kind of like a workshop. Pretty sweet place. Separate entrance to the basement. Good condition. Kitchen needs to be updated, but the bathrooms are all updated. Maybe throw down some new flooring. Listed at $750. It's the cheapest detached in Whitby, right? It's a small house.
Whitby.
And I'm getting
is Whitby in Durham?
I'm Durham, yeah. Pickering, Ajax, Whitby, Oshawa. So it's kind of, 3/4 of the way out
there.
What
was it? What's it price versus peak, TK?
Price versus peak.
What's the price to peak ratio?
Close to 20%.
20% below peak.
Close to peak, yeah. Because the neighbor sold, it was a smaller house for $860 in the peak. So these guys probably would have been $900. So 20% below peak would be
20% below peak.
Yeah, but anyways.
It's too bad. Hey, listen, what are you gonna do? Not everybody can call the top, and not everybody's ready to sell at the top. I mean, circumstances, right? Circumstances. Bro, the world's going crazy right now. Would you go? Why? You're so wrapped up in yourself, TK. You never know what's going on.
I'm just not on Twitter, so I'm not getting the negativity.
Twitter. Have you heard of this thing called the TTC? TK.
Oh, the TTC.
Have you heard would you go on the TTC right now?
I would.
You would? You would risk being stabbed to get downtown?
I think the risk of being stabbed is the same whether I'm on the TTC or not. I mean,
these days, the risk of getting shot, stabbed, or swarmed are pretty high.
This episode is brought to you by Landlord.
This Landlord software is a game changer. You upload your properties, right? You'll upload all the information, income, expenses, timelines, mortgage details, everything that you need to have so that you can keep track of everything in your portfolio. And as you go through real-time adjustments in, rent increases and water bills and tax bills and everything else, they're going to actually give you recommendations on how to make your portfolio more efficient. And it just breaks everything down for me in a way that I've never seen before. Like Excel spreadsheets just don't cut it. I don't think there's a better program or app out there for investors, and it's free.
Please click the link below for your free trial offer.
Yeah, I think the TTC is a safe place. I don't think that there's anything that people are, particularly targeting anybody at the TTC. I just think that sometimes there's random stuff that can happen. And
there's a lot of random stuff going on at the moment, like simultaneously. It seems like the TTC's just getting hit.
Remember my sister and her partner in policing and all that stuff. And I remember there was a time where we had 4 police officers who were killed all on duty, right? Maybe one was off duty. But I didn't immediately go, oh my gosh, it's not safe to be a police officer anymore.
Yeah, well, it already isn't. That's why, because you already go into that going, this is probably the least safe thing that I could do.
Well, again, I disagree, but Things happen.
Maybe a stewardess on the airplane is a little less safe.
I've seen some videos. Yeah, I've seen some videos.
I always look
So,
at the
I think the
stewardess
TT
and
safe.
wonder, what
TTC
the
is safe.
hell? Why do you want to fly so many times in even one day? It's crazy. Okay, TK, we're getting off the rails.
What's going on here,
There's
Joe?
people waiting. Real estate is crazy. I don't know. I mean, I start off confused, but like this is crazy. Things aren't making any sense. Immigration is crazy. Like employment levels are crazy. Rental vacancies are crazy. Everything's crazy, TK.
Mm-hmm. We're crazy.
I'm freaking crazy. We got a cough going around this house like crazy right now. I coughed so hard I blew my back out. This is not
Does
good.
that like speak levels to the cough, the intensity of the cough, or the weakness of your back?
It's a combo.
It's a combo.
It's a combo of both. Well, look, we've got people waiting to get on the show, TK. We have a lot of people. So like, let's start getting people in here. You know what? He's never been on the show before. Let's start with him for a couple minutes. This guy's the big time. This is the big time here. This is like, this guy's on the #1 real estate podcast on.
Is he trolling us? Oh, there he goes.
On planet Earth right now.
Hey.
Oh, come on.
We hear about their issues all the time, every week with their technical difficulties, and it's all an Mr. Act. Nick, welcome to the show, Nick Hill.
Fellas, hey, pleasure
nice
to be here. Thanks so much for having me. Yeah, I've been a long time listener, so it's great to come on.
Yeah, we've
awesome.
been.
You guys are killing it out there with the show, man.
Yeah.
Good for you.
Appreciate that. Yeah, it's a lot of work. Actually, I got you guys will love this. I'll share this before anyone else joins. We get a ton of mail from the podcast, right? And 98% of it is great. So this morning I'm just, sending some emails, and I get this email. Hey fellas, I have a bone to pick with you. When discussing Victoria, BC the other day, you referred to it as the Pacific Northwest. This is an American term referring to the Washington state, and it's nails on a chalkboard for most of us that live on the island or anywhere in the BC coast, the west, or even the southwest of Canada. I absolutely fucking hate when people refer to anything south of the Bella Coola as the Pacific Northwest. Please never, ever, ever do it again. I have been forced to lower my star rating on your podcast, but would be happy to fix it when redacted.
How dare you? Forced redaction. TK,
I can't believe you did that.
It's an opportunity for us.
We had a background one time that was definitely Quebec City, and we're like, we're in Montreal. And then someone in the comments is like, guys, that's Quebec City. Like, what are you doing? We're like, oh, never mind, Quebec City.
I pictured it in a French accent though, and I felt like it was very aggressive and
that guy was bilingual.
Well, I mean, you might, I don't know what the West. I'm born and raised in Vancouver, and
so you should know better. What the hell's wrong with you?
Well, what I did is I went and Googled, what is the Pacific Northwest, and of course it's from the Yukon all the way down to the base of Washington.
An American wrote that.
So I was just I'm not even going to engage with this person, but I was going to send them several pictures of BC and being included in the Pacific Northwest. The fact that Pacific Northwest Trail starts in Vancouver and goes down. Anyways, just a little aside. I'm sure you guys have gotten your fair share of interesting mail over the years.
People don't really listen to our show, to be honest with you. It's, you're like, we got all this mail, and me and Daryl are just like, yeah, we get mail. Yeah, lots of people.
The hell's he talking about? But, what's this?
We do it for fun. You guys are definitely like on the ball. I mean, you got a lot of expertise. Obviously Dan does well.
Learn from these guys.
Yeah, that's all Dan.
You guys provide a lot of content. We bring on people who are smarter than us. That's kind of what we do. That's our.
Well, you've screwed up today, my friend. I don't know.
No, they're coming.
Well, where we may lack in quality, we're making up for in quantity. That's for sure.
Yeah. Love it.
No, we listen. I mean, everybody wants to talk about interest rates, right? And everybody's thinking about interest rate. Well, not everybody, just everybody that we all know, right?
Mm-hmm.
So, I mean, what a great time to get some of the more social facing mortgage guys. So we got a couple other guys in here that we would like to invite as well. And
Yeah, I see Vince. I mean Vince is an OG in the space, right? I mean, I'm going to be by far and Mark as well. I've been following Mark for a while.
Mark's got such a great channel.
Hilarious Instagram account as well. Yeah.
There he is.
There he is.
There he is.
Hey guys,
Hey,
How are
Mark.
ya?
Welcome.
how you doing?
Great. How are
Fantastic. Yeah.
Good to see you.
Nothing
you-
like another podcast.
you? Yeah.
Yeah, it's been a while.
It's
Right?
been
Get
it's
some more
been
info.
too long. Too bad we
Yeah.
can't have everybody on every single time. We just need to have 24/7 real estate live show, like just constantly. I could do it, TK.
I think you could do it.
I could do it.
Yeah. I'd have to be in one of the hour time slots like everyone else.
It wouldn't be
Well-
hard to replicate me, right? Like, so
AI is
we
gonna
could
do
just
it.
have me on a loop and just
Yeah.
change guests throughout, right?
We'll figure it out with AI. So what's going on out there, guys? I mean, we had a rate hike last week. You know, did anybody care?
Does anybody even? It's like we're desensitized. It's like, right?
Yeah.
Like
Yeah,
it's-
25 would have been big like a year ago, right? And now
Right.
we just shrug it off.
Yeah, I mean, I
Thank
remember probably over a year ago, there was a lot of anticipation for one of the announcements. I mean, everyone was expecting. I think the economists had baked it in as well, and then it didn't happen. And you know, then it didn't happen again several more times, and we just kind of didn't seem to care, forgot about it. And now the opposite's happened. Right now, it's happened so many times. I think you're right. We are a little desensitized to it, and I think it would have probably made more headlines if it was a 50 or 75, but 25 was, I think, pretty much expected at that point, especially with what we saw with the job numbers that had come out.
Right. Like the job numbers really threw a wrench in things as far as I was looking at things. And then it's like, even like, was 25 enough? Like based on what's really going on out there? I mean,
Time will tell, I guess.
well, I mean, I'm
Yeah.
sure all of us were in the camp that like back a year ago when we all thought it was going to maybe be 825 BIP raises, right? We were all of the opinion that that was already crazy. And then we got what we got, right? And so now like when we see out there that employment is like going, like unemployment is crazy, right? Like salaries are still going up. Oil has to go up. I don't even know why oil's low. I mean, that doesn't even make any sense. Shelter's going up like crazy, obviously. So like how is it only a quarter point now if the whole point is to kind of get ahead of things?
Yeah, I think it's a kind of a hope and a prayer right now, because they know they can't go much higher without really hurting things, I think. So
Right.
What are your clients saying, Mark? Because I think that's the most important thing is not just like how does my mortgage payment change, but like how are the people reacting? So what kind of calls have you been getting pre and post rate announcement?
It really hasn't changed a whole lot because bond yields are remaining low. So all the fixed rates are still the same. And I think a lot of people got off the variable bandwagon months ago. So in terms of buying a home, it's not really affecting anybody because most clients that I have at least are fixed. So I haven't seen a whole lot of reaction. And everybody was kind of expecting 25 at minimum anyway. So they're kind of like us, most of my clients anyway. They're just kind of shrugging it off.
Just shrugging it off.
No one's panicking right now to get their rates held or anything like that.
No, because the fixed rates have come down so much over the past few months.
Why have fixed rates come down? Explain that to our listeners.
Because the yield, the bond yield, the amount of money that you can make off of a Canadian government bond has lowered because investors are all expecting the Bank of Canada to pause. So with the money you can make off of a Canadian bond yield, off of a Canadian bond lowers, then fixed rates follow. So fixed rates are always going to be a little bit higher than you can make off of the government because a mortgage is more risky than lending to the government, right? So when the amount of money you make from bonds comes down, then so do fixed rates. It's not directly tied to the Bank of Canada when they raise rates.
So bond investors right now are basically saying we don't think rates are going to go up very
That's
much
right.
at all.
Yeah.
That's right. That's
if
right.
anything, come down maybe some of them.
Exactly. Yeah, they're expecting a pause late 2023, or not a pause. They're expecting a reversal late 2023. So right now, a lot of the markets are fighting the central banks, in fact, thinking that the banks aren't going to be able to follow through with these hikes, with what's needed. They think the banks are going to back down.
It's interesting right now. It's kind of the BOC versus the GOC. The GOC being the government of Canada.
Right.
Yeah.
Right.
Who's winning? Who's winning? What's going on? What round are we in? Who's
ongoing battle. Yeah.
It's not the people that have variable rates. That's for sure. Hey, Nolan, welcome to the show, sir.
Hey, how are you?
Good. How are you?
All right, we've got
really
Nick Hill,
good.
Mark Mitchell, Nolan Mathias.
I
We
think
are rocking.
Yeah, we were still waiting for one more. I think he's having some technical difficulties, but I mean, look at this panel. Hey, TK, look at us.
Nolan, have you seen any changes? Like, is there anybody calling you saying different things since this rate announcement? Is there any change at all?
Yeah, I mean, we're seeing lots of people who are having strategy changes, right? Like flipping from that variable to that fixed side, looking for smarter decisions as opposed to just like, let's grab that variable rate because it's cheap. A lot of people, I mean, there's still this tendency, right? There's always a tendency to try to time the market. People, when they were choosing variable rates, they thought they were trying to time the market. It wasn't what the point of the variable rate was. The point of the variable rate was to take the position that you're in the market, you're going to follow the market. And if you do, then over the long run, you should probably save. And now they're finding themselves in a situation where they're back into this, let's time the market and take a fixed rate now. And I think there's some validity to that, given the fact that you can get such a significantly lower rate on a fixed right now than you can on a variable. The question is how long. So I think what it's done is the difference between the two rates, once the consumer figures out that there's a big difference there and it's not the difference it used to be, is creating quite a bit of confusion for consumers.
Has variable ever been higher than fixed before? Like, I don't follow it, but
there's basically, so the misconception is that if you choose a variable rate when interest rates are going up, that's when you win with a variable rate. And that's not exactly true. The science on it, the data on it, and this goes back to that Mosh-Milevsky study that brokers use to push people into variable rates. That Mosh-Milevsky study points out really clearly that there was 3 times leading up to the early 2000s, and there's been 2 times since then where it did make sense to choose a fixed rate over a variable. And the reason why was because that yield curve inversion happened and those variable rates were priced higher than the fixed rates. And those are actually the 3 or 4 times. There's really interesting chart on it that you can look at where it actually made sense to pick that fixed if you ignored everything that's really important, like risk tolerance.
And so is it potentially we're in that time right now? Like, I mean, I know there's variables, but potentially it could make sense for someone to be going in with a fixed rate on a 5-year closed term.
If you're getting a brand new mortgage, I wouldn't necessarily say a 5-year, but if you're getting a brand new mortgage, it absolutely makes sense for you to be in a 2 or a 3-year fixed versus a variable, because it's going to take it. I shouldn't say it's going to take, because when I say things like it's going to take, the internet beats me up and says I made a prediction and I'm trying to provide perspective, but it typically takes, 18 to 24 months for a reverse in interest rates to happen. Now everybody's thinking, oh, it's going to happen like right now, end of 2023. It's probably not. So the reality of it is it takes quite a while for those reversals typically to happen. And if that holds true, then kind of being protected in that lower fixed rate mortgage for 2 or 3 years is probably the smarter strategy.
But we've never seen a rate hike so steep. So like, can we predict the other end of this the same way, like using those charts from times where they raised in a very, very different environment?
So we have seen interest rate hikes this steep. So never say never. It happened once before that we can remember, going back to the early 1900s. And you're right, like past performance is not a predictor of future performance type thing. So and if there's one thing the pandemic taught us, it's that like everything previously, we have to throw all that out the window. We have this weird scenario where it's like history rhymes, and normally in normal circumstances you can kind of predict what's going to happen based on what you've seen before. But this, like a pandemic, the way it happened in a modern economy like we have right now, is not something that we've ever seen before. So no, we probably can't use the past charts, but we can definitely do some strategy. I mean, it's pretty simple math, right? If you can get a fixed rate for 4.79 right now, and your variable rate is 5.7, if you can lock in for 2 or 3 years at 1% lower, you're probably making a pretty good bet that if you lock in that mortgage, that you're going to save money while those interest rates come down, right? Like it's pretty clear.
What about if someone's already in a variable and they have to now at the prime rate fix their mortgage with whatever 2, 3, 4 years left?
Yeah.
How do you navigate that? Like, how do you talk to a client about that situation?
Totally. If a lender will let you lock into a lower rate on a 2 or 3 year, I'd absolutely do it. But more importantly, what I would do is if you've got a variable rate now and you're paying 5.7, I would be looking to a mortgage broker and I would be going, how do I get this from you're paying 5.7. How do I get this from 5.7 down to 4.7? And
so maybe pay the penalty and go in with a new mortgage.
Yeah. And the math on that's really simple, right? Like the difference is so easy, because if you got a $500,000 mortgage and it's a 1% difference, that's $5,000 a year. So if you get a 3-month interest penalty, figure out what your 3-month interest penalty is. And if it is lower than that $5,000, you do it. And if it isn't, you don't.
So it's actually good advice right now for people who are in variable, who are, savvy and willing to be able to really, buckle down here and make sure that they know what their payments are going to be like and don't want to have that exposure, because rates, for all we know, could end up going up further.
Totally.
Right.
It's interesting, right? Because on my channel, you got 30,000 people that are 30,000 subscribers, but you got 800,000 people every month that are coming to the channel, and they're just going, you predicted variable, or you promoted variable rate. You were wrong. You gave bad advice. And it's like, well, the advice hasn't actually changed. Everything that I'm saying now is the same advice that I was saying then. The advice back then was, here's what you do based on the odds when variable rates are significantly lower than fixed rates, and vice versa, what you do when fixed rates are lower than variable rates.
Yeah, it's funny, Nolan. I mean, listen, I tune into the channel quite often. You put out amazing content. So well done there. But and it's funny. I mean, most people don't understand that what we're chasing a moving target the whole time, right? So variable rate was the better idea up until it wasn't, and then the advice changes. And for everyone on this panel or chat right now, I mean, we're deep into it. We do it day in and day out. But for most people, it's not a top of mind subject, right? So it's up to people like us to put it out on social media or maintain our clients and make sure they're getting the right service.
Yeah, it was interesting. My wife and I were having a conversation yesterday, and like late last night, my wife sings in a choir, so she had a show. She got home late, and we dipped into a glass of wine, and we started talking about, like, how do you explain this stuff realistically to a consumer? And we started talking about, like, who's the enemy of the Canadian consumer right now when it comes to mortgages. And the reality is it's the big banks and the discount mortgage companies. Those are the two enemies. And you've got this really amazing group of brokers who are incentivized to save people money. And yes, they get paid when they save people money, but the proportion that they get paid compared to the amount that they can potentially save you just by having good advice and making sure that you don't do something silly or make a mistake because you have a blind spot, like get a discount mortgage that has a bona fide sale clause, or take a bank 5-year fix that has a significant penalty that when interest rates come down, you aren't going to be able to get a better deal on somewhere down the road. I mean, that group of people is really, really important to the Canadian mortgage and the Canadian real estate industry right now. And it's awesome seeing guys like Mark and you and the people that are on this
Darryl
call.
and TK.
And Darryl and TK, although
Darryl and TK, mortgage specialist.
Bring on the right people, okay? We don't know the info, but
hey, listen,
we make sure people get the info the same way.
I've signed for enough mortgages to be an expert in this territory. Not in selling them though. I would hate. Oh my God! Right now, I'd hate to be dealing with people. Vince talks about. Welcome to the show, Vince. Thank you for.
Sorry about the technical difficulty. I had to reset my password and figure out how this whole thing works. So I apologize for the delay.
I must be doing something wrong because everybody has this password issue, right?
Yeah, I had the same thing.
Problem. Yeah. Listen, I'll figure it out at some point. I promise. But thanks for joining us.
Come in halfway through. I apologize.
It's okay. We're
Welcome,
just
welcome.
getting rocking and rolling here. But you talk about it in Foch's space from time to time, and I know I've talked about it a lot. It's this renewal issue that's got to be coming down the pipe, right? Like, I mean, I know for myself, my mortgage is renewing sooner than later, and I've been thinking about it for a while. Like, what the hell, right? Because I mean, values are not going up at the moment, right? So, you know, if you have to renew, it's a weird time, isn't it?
Well, there's two camps, right? There's the folks that are renewing out of a 5-year, and then there's the folks that are renewing out of their alternative deals from last year
Or the year before. Yeah.
Both are two different scenarios, right? The folks from 2018 or late 2017 that were renewing in the last little while had a lot of equity, right? There's a bit of a comfort zone with the equity they built up over the last 5 years. As for the folks that are renewing in a year, it's just a bloodbath. Like, it's a shit.
Yeah.
So, you know, I pulled one up, and I brought this up a couple times on my show and a couple spaces. I got a chap who's actually renewed yesterday, January 27th. And this is with Home Trust. So he went from 339 to 8.2 in a year.
Whoa.
So he and it's not a big deal, right? It's like 600 and change, 615 grand. He went from $1,690 every 2 weeks to $2,441.
So it's that 3,300 to what? What's that a month?
So it's basically $751 biweekly. It's 19,500 in more payments that he's got to make in the next year.
Yeah, about a 50% increase.
20 grand.
Yeah.
Right, in a year. Like,
where does it come from?
Not 5 years.
But where does it come from when every other cost everybody has is going up? And unless I'm missing something, are you guys paying less for anything right now?
No. And I think the real issue is, you know, these folks are in trouble. They're scraping through credit cards, lines of credits, any RSPs they have, any tax-free savings, any form of savings that they have, they're scraping through. So they're going to get by, and everybody says, well, delinquency's insignificant. Like, we're not seeing anything. Of course, you're going to pay for your house first, especially when there's snowstorms going on outside, right? So you're going to keep the shelter going first. So you're going to pay that. And then once you hit your capacity and your maximum limits, then what? Now you got a mortgage payment, you got to make minimum payments on all your credit cards and lines of credits, and the shit hits the fan. So, you know, when Ron and I talk about when will the blood start spilling, it's going to be second quarter, because people are going to run out of gas.
We're starting to see the private deals come up on power sales on the MLS. I'm a realtor, so that's my side.
That's already been happening.
But not the A lenders. Have you guys experienced that yet? Has any A lenders had any
power
sales? The alternative guys.
Lenders are starting. They give instructions to enforcement lawyers to go ahead after the holidays.
Yeah.
So the power sales we're seeing in people's hands are dated January 4th.
Mm-hmm.
You know, we dealt with three a couple weeks ago. I've never seen 3 in a week. So, you know, it's things are going to start to break.
But are they true power of sales, or are they like about to go power of sale and like we're going to list it so that we don't lose any market right now? Because there's a difference. Like, there's realtors putting power of sale on the listing, and it's not really in power of sale at the moment. It's like about to go power of sale, right?
No, the ones that are going on are power of sales if they're marketing power of sale.
But I think so. On the private space, I think there's a difference between power of sale because the clients aren't making the payments versus power of sale because the private lender doesn't want to renew. And I'm actually working on a video on that right now, because a lot of private lenders just want their money out.
Yeah.
They don't want it. They won't do an auto renewal. So if the client can't pay, like if the homeowner can't switch the mortgage to somewhere else, or they can't get the extension from the private lender, then the lender can bring it to power of sale, and then it goes up on the market. And these people have been making their payments.
Well, Mark, you bring up a very good point. There's an interesting phenomena happening on why Mix and some of these private lenders are calling them in. Usually they have lines of credit set up with the big banks or whomever's giving them the facilities to use. And some of those covenants require that they will only lend on portfolio on first mortgages below 75% loan to value.
Yeah.
So these private mix are having to do CMAs or drive-by appraisals or reassessments of their portfolios to see where that LTV sits. So what may have been 75% loan to value last year may be 85% this year or higher.
Yeah.
And the lender providing the line of credit saying, well, you know what? I'm not lending on that property. I want to be calling back that amount of funding, and it's prompting these mix to call those loans for no reason.
Yeah.
And I think that's got to be flushed out, because these are folks making their payments.
Yeah.
They're making them on time, and you got these operators calling them in for the sole reason that their loan to value is has gone up. Now, all these big banks have fucking economic departments that have told them that there's going to be a correction. So why aren't they all aligned with their credit departments to give some leeway to these folks that are making payments? And that's going to be something that's going to be flushed out and talked about. It's one thing to have people that can't make payments and you're calling their loans. It's another thing to call them in when they are.
Yeah.
And there's an underlying big five lender that's pushing these mix to do what they're doing. And that will flush out in when it all comes, when everything's said and done. And there should be some accountability for that.
Yeah.
Mm-hmm. To Mark's point, though, the ones that I'm dealing with are the ones where they won't renew. The payments are being made. There's huge fees. There's all that kind of stuff involved. And the lenders are pushing them to sell. And so they're coming to us saying, look, I can't renew. I can't find another lender. We need to sell. And the lenders have all been cooperative. Nobody's pushed anything. They're sending emails saying we've got mortgage for sale documents signed and they're going to be issued this date. You need this. So they're putting a lot of pressure on us to get sold. And thankfully, the market's been a little bit stable over the last few months to get them all done. But that's what I'm seeing on my end. But then I've just started seeing more and more power sales each week, more coming up on the MLS, and they're all from like, numbered companies. I don't know if they're mixed or private, or they're from alternative lenders, like you said, Vince.
And the unfortunate thing there is they're likely doing those consumers a favor, those borrowers a favor, by putting them into the power of sale position because they don't qualify for those mortgages. They were alternative borrowers to begin with, and they won't be able to make their payments going forward in all likelihood.
Yeah.
So as much as it's
better now than later. Well, better now than later, because later it'll probably be a bigger loss, right? So okay, so we all just saw.
That depends, though, right? A lot of alternative lending, it's short-term solutions. So whereas these people would income qualify after whatever needed to happen, whether they needed to get past their probation, whether or not she's coming back from maternity leave, whatever put them in that space, there was supposed to be a plan in place at the beginning. So at the end of that year, they would be able to switch out. So they might have the income that they can switch out to like a bank lender or monoline. But the values aren't there, because that monoline is going to want to have an appraisal done. Right. And if it's over 80 loan to value, then they're stuck.
Well, because we have a bullshit appraisal reversal going on right now, right? So we had these crazy bullshit appraisals on the way up, and now to cover their asses, they have to de-escalate the damage, right? They have to, the banks are not going to be happy with an appraisal at the same as what they paid for it right now if it was a year ago, right? And so how do you qualify now when the rate goes up so much and no one's even willing to give you a goddamn loan? This is crazy. So, okay, hold on a sec. So we just saw another 25 basis point rate hike, okay, and we've all just shrugged it off. Like Vince came in, he didn't even mention. So like everybody's accustomed to that, but now we hear the word pause. Okay, so let's talk about what happens after the pause. If we're going to get a pause, we're all assuming that a pause means no more rate hikes for a little while, and I think it sounds like I know Vince definitely feels, but like we haven't really felt the pain yet, have we? Right. So Vince said second quarter, everybody's shaking their heads. I can see everybody's heads. So like we think pain is still to come. Right. And so what happens now? Because employment, like I was saying before, is like off the rails. Right. Rents are going crazy. Like everything's going crazy. Like how do we not raise rates more? So like and what are we waiting to see now, and for how long? Anybody jump in there? There's a lot of shit I just threw at you.
Well, Yeah, that's pretty loaded.
Welcome
Well,
to the
how-
Canadian Real Estate Show.
Well, but let's
questions of the
somebody
podcast.
just
Yeah.
start somewhere. Like, what?
Let's start.
Yeah,
Let's
welcome to
start
the
with
show.
inflation. Let's start with inflation. Inflation's going nowhere. You know, and everybody wants to track historic trends and shit like that. What everybody forgets about is this green movement. Every government's bought into this shit. Okay, which means inflation's going to be jacked up because going green's not cheap. Everything's going up. So how the central bank thinks that we're going to see 2% and 3% target rates is fucking utter nonsense. It's not happening. Okay, so high rates are here to stay. And how do we deal with it? You talked about valuations, Darryl. There's not enough data. There's not enough sales to give a true evaluation. Just because somebody's stressed doesn't mean that's an indication of what the rest of the neighborhood's worth. But that's how appraisals are done. They're done on a comparative analysis. So is it really the floor?
No, it can't be.
Every appraiser right now that I call, if it's a fucking $2 million home or more, well, I can't do it. I don't have the liability insurance. So everybody's running scared.
Oh God!
Right? So everybody's running scared, and they're going to lowball that value.
Yeah,
and
for sure.
Erode equity based
Jesus.
on fear, right? And guess what? When you're in a power sales situation, you got two appraisals and they're both telling you that it's depressed. Well, they can fucking sell it for whatever they want as long as it's close to that number, and they avoid any concern from the courts to say that you undersold the property. But you got appraisers that are fearful of giving a true value. Like I'm seeing appraisals now, like the adjustments and variances are more than 10%, right? So they're not even using the proper comparable.
We have a metric here that we've been using
That's
lately,
right.
which is price compared to peak, right? So you're saying
Price to peak
10%
ratio.
lower than peak, or
good.
10% what you think is what it's actually worth today.
TK just listed something for 20% below peak.
20% below peak, because people like to sell over asking. Well, I like to sell for closer to
as
peak.
close to peak as possible.
That's the goal.
I love that.
It's smoke and mirrors.
It's all smoke and mirrors and it's all horseshit. But having said that, we haven't seen the pain, right? And I don't know, it seems like people have you gone to a restaurant lately? Like, does it look like they're hurting? I mean, other than the service being horrendous, right? And the food sucking everywhere, like there's people paying for this shit still everywhere. Right? Like everything is packed. Everything. I paid a lot of money to go to the theater to Harry Potter and it was packed, man, packed. So like lots of people paid a lot of money for this shit. And everybody went for dinner first or after and went for drinks. Like this country's still hopping everywhere. Like what's going on? So
Darryl, people are still spending, but what's funny is the reactions after they've had that meal, they're very critical and they're fucking angry.
Can't do this again. Fuck
it's
this,
like,
right?
Fuck, this is too
Where are we going tomorrow?
Fucking service sucks. Fuck,
the employees aren't happy. They don't give a shit.
But it's like,
care.
where are we going next?
3 other jobs lined up if this one doesn't work out for them, right?
Everybody.
I think the pandemic played a role in that as well, right? No one did anything for 2 years. Now we're kind of allowed back out. People are going back out, and there's all this talk of the recession, but I think you're right, Darryl. Like, you go out and
fuck is it?
It's not really obviously there yet, but then you start to look at the, I think we all probably looked at the monetary policy and the consumer sentiment and the consumer confidence is almost back down to like the lowest of the low at the pandemic level. So it is there, like it does exist, but I completely agree with the idea that we're probably going to start to really see the shit hit the fan Q2, Q3, Q4 of this year as those renewals start to come up, as we kind of get deeper into this recession, right? I mean, everything we have is a lagging indicator. We don't have enough data to keep up to date like they do in the States, right? We're months behind on all this stuff. So yeah, I completely agree. And there's a couple good restaurants out there.
Sure. But it's only a couple. Like the city used to be known for them. But seriously, like they're really nice places now. You go there and it's like, what the hell happened? It's
expensive. It's crazy expensive too.
Crazy.
Too many jobs. Employment market's too strong.
Yeah.
So, but
We've got
again,
really good restaurants in Alberta. If you guys want to move out here, everyone else is doing it.
It's a dead cat.
everybody's doing it. It's true. It's like, it's a thing, but it needs to happen. Like, there's not really many choices over here. Like, if you want what your parents, what you grew up in, like, it's hard to get here unless
Move away.
Like,
Well,
I don't know how many mortgage brokers are on the panel, but
four.
I'll tell you this,
Surrounded.
and tell me if I'm wrong. As a mortgage broker, we're in the weeds. Activities picked up. It's not because of sales. Okay. It's because of refinancing, renewal problems. Okay. And every call is almost 2.5 times what it used to be. And the first half of that call is getting somebody together because they're emotional basket case.
Yeah.
Okay. It's a fucking shit show. And I think I've amassed enough hours to be a psychoanalyst and start having sessions for therapy because it is a fucking mess.
Yeah.
And you got people crying. You got people not realizing what they're spending money on because they're in a paralysis and in shock. And you got to get back to basics. You got to really ask them to say, you got to get them to fucking print out their bank statements the last 6 months, print out their Visa statements because everything's online. They don't fucking look at what they're spending money on. And you got to sit down and say, look at how many subscriptions you have. Yeah. And I know we make fun of the Disney Plus shit with Freeland and stuff, but people don't know what they're spending money on. It's sad. They're ignorant. And they just got to start budgeting.
Sure.
Yeah.
But it's
therapist,
so easy
financial
to
planner, mortgage agent.
Well, but this is the thing.
Everybody knows that they qualified at 5.25, right? A year ago. So they're paying 1.5 on a variable. They got qualified at 5.25. But where'd the money go? Where'd that buffer go? Where'd they spend the money on?
Yeah.
Spent it on something.
Yeah, it's there.
It's
that
there.
income's there.
I don't know where it is.
Yeah, not enough craft dinner.
They want to live the high life.
Well, so we have this renewal thing coming where we have all these people that had multiple guarantors, right? Multiple guarantors and parents giving gifts from their lines of credit. And like, I think we have multiple people holding things up that are kind of falling simultaneously, right? Like the guy who helped you guarantee is probably having a tough time himself right now, right?
Yeah, this actually, if I can jump in here, Dale, this is a question I'd love to ask the three guys who have way more experience than I do. So we've seen a lot more co-signers come on. Obviously, the gifting thing that, there was news articles about that, but the co-signing, I have looked Stats Canada, CMHC, all the big banks, and I can't find, and maybe I'm just ignorant here, but I can't find any information on what I would consider a drastic increase in people co-signing for properties. And I'm wondering if that's something that you guys have seen as well.
Nick, I'm going to tell you a quick story. 2 Christmases ago, Minister Hassan was appointed Minister of Housing from Immigration, I believe. And a buddy of mine called me up. He said, Vince, I want you to come to my office. I want you to meet somebody. I want you to talk to them. And I walked in his office and Minister Hassan was there. He had just gotten his mandate letter from the Prime Minister. And I'd read it before I'd gotten there. And his mandate was to go after investors, right? At the time, this is a
few years
December
before
21. Okay.
Yeah, okay.
So Peter says, Vince, talk to him about what we talked about last week because it's really important. And I said, I understand you're going after investors. And he goes, yeah, it's a big concern. It's gone from 12% to 26% in the last several years since 2008. And I said, well, I'm going to tell you something. That's bullshit. It's bullshit because in the fall of 2018, the stress test came out. And all of a sudden, every broker on this panel saw an increase in application flow where 2 people on title was the norm, went to 4, 3, 4. We saw multiple people on title because young folks had to get co-signers. And the definition of an investor is someone who has more than one property. And a lot of parents that go on, they go on as a 1% beneficial owner.
Right.
I said, so your fucking stats, this stress test has created an unintended consequence. So your analysts are saying, holy shit, there's a lot of people that own multiple properties. But why don't you ask them to filter through their land registry? Because you could see who's on title and you could see their birth dates. And you could, I'll bet dollars to donuts that most likely there's a 25 to 30 year age gap between people on title. Are they a true investor or just somebody trying to help their kids get into the
not a true investor whatsoever. I mean, that's that's a great point.
Right. And he sat there and he said, fuck, he had his secretary write something down. Now, he didn't go after investors in the budget. And I'm not suggesting for a minute that I had anything.
You single-handedly helped us save the investors. Love it.
No, I'm not going to.
No, I know. I'm just kidding.
Saying, like, guys,
no, they didn't listen to him.
Thank you for your service.
You're right. They did. Yeah, they didn't end up. Yeah,
they didn't care what he said. They didn't care what he said.
Vince, we need you to have another talk with them.
Right? They have the wrong people at the table. We're in the weeds. Yeah, we see what's going on, right? And as much as we're into the minutia and shit like that, we get to see the behaviors of what's going on. And I'm telling you, the government has no fucking clue what is going on and what people are going through, because all they deal with are bureaucrats who get fucking paid every 2 weeks, no matter whether they go to work, whether they do fuck all, whether their union protects them. The productivity is at an all-time low. You can't get a fucking passport in this country in reasonable time. So it's all broken.
So OSFI, this is a good segue. Right? These new recommendations that they're putting out to the public for consultation, this all falls underneath that same umbrella.
Yeah, absolutely. I made a video on this and I got to go back and make another one because I was wrong on this. Those OSFI recommendations, when you look at what they're recommending at the interest rates that we're at right now, they're probably not super consequential, although I'll defer to Vince on that because I can't remember what the last two were. I can only remember what the first one was. But I have to bounce out of here right now, guys, but I just want to say something real quick. Vince and a handful of other guys are freaking legends in this industry. And when they talk, you need to listen. That conversation he had with...
I'm humbled.
No, I really do mean it. I mean, you're a Hall of Fame member, but you're also like, there's literally like a handful of guys. You, Peter Matheny, couple other names that would escape me at this moment. But when he's having conversations with guys like these MPs and whatnot, I mean, he's got his finger on the pulse of what's really happening. And I mean, for Mark and Nick, who are doing a great job as well, I mean, these are the guys we need to look to. And I'm really honored that I got the opportunity to be on a panel with you. And I wish I could be here for the rest of the conversation. I definitely watch it. But yeah, I mean, you're right. Like they're taking OSFI, federal government, they're all taking stabs at how to fix a problem that ultimately they created years ago by doing things like stress test and everything else. So I'll leave you guys with that. Hope you guys have a great rest of the show and we'll go from there.
Thanks, Nolan.
Thanks, Nolan.
We'll get back on later.
Thanks for having me.
Take it easy, bud. Yeah. So where were we? So everything's a mess and it's not getting better anytime soon, right? So what does this look like for interest rates in the future? So let's say what is even a pause? Like, is this when's the next meeting in March?
March 8th. Yeah.
March 8th. Okay.
It's funny, everyone heard that pause and then they kind of didn't really seem like they listened to the rest of it, or at least on social media, right? And then basically, if you read the rest of or even if just the highlights, it's far too early to talk about rate cuts. We're still, they almost went and said it and then retracted it, kind of,
sure,
like, stepping on eggshells kind of thing, right? And if you listen to the rhetoric that the Bank of Canada has been putting out for the last year and a half, 2 years, they're just trying to figure it out as well, right? I mean, I don't think they're doing this on purpose to screw over real estate investors. Real estate mortgages are just a byproduct of overall, what's happening overall, right? So obviously we're hyper focused on it. And if you look at what the Bank of Canada said is they will literally do whatever they can to battle inflation. And I think there's like a stat that says 100% success rate of doing that through raising interest rates.
And Nick, do you think the Bank of Canada, listen, I'm very critical of the Bank of Canada because I think they're playing with their hands tied behind their back. You got a government that continues to print money.
Yeah.
They're pushing this green movement, carbon taxes, like everything's going up. Like, how do you battle inflation, right? He's almost afraid to go 50 basis points.
Yeah. Yeah.
They get land back, right? But
If Macklin said that, I think
doesn't the cost to service the debt go up? Like, it's going to be a shit show.
It has
it rolls
to.
over.
Yeah.
Hyperinflation. They're continuously printing money. A year ago they were all excited. Well, listen, we could spend the fucking money for all the stimulus because the interest cost is low.
Yeah.
Okay. Now what?
Everyone buying investment properties that they have no idea how to run, or cryptocurrency that they have no idea what it is or anything, and all that money was pumped into the economy, dumb money, and now it's dissipating. I do want to ask you guys. So I don't know if anyone tuned into the CIBC, where are we now, Ben Tal thing yesterday or 2 days ago. But it was a little more bullish than I had expected. And I know I got a lot of time for Ben Tal and a lot of the other chief economists at the big banks, because a lot smarter than I am. But he's basically saying rates will be back down in the threes by Q1, Q2 of 2024, and that we probably will likely not see a rate cut this entire year, which I don't think comes as a surprise to anybody. But rates will start to be cut early next year. And if we get back down to the threes, I mean, that's several cuts or a few major cuts.
I hope he's right.
But so do I.
He also called for 3 hikes in 2023.
Yes.
Yeah. I respect him a lot too. But yeah, there's been a lot of stuff that I follow that I've heard from him that it's not always accurate, right? I think he has a good job. He has a cushy job. And he's there to promote spending so that people are
and he's a great
borrowing more money,
right?
and going
he's
to CIBC to get that from.
Yeah, he's a wonderful communicator. I love him. I love his style because he talks down
funny,
in our language, and makes people understand what's going on. But he's an economist
at a banking institution that may have some vested interest in what he's saying, if you know what I mean.
Yeah.
Sure. And influence. I mean, let's be realistic.
Influence for sure. Well, that goes back to the sentiment piece, right? I think sentiment now is playing more of a role than ever. So, you got Ben Tal going on, and you got a couple 100,000 Canadians listening. Does that move the needle on sentiment the right way? And does the sentiment needle move the economy and inflation needle?
So, but what do the banks want? Like, what would be the big 5 banks? What would be their goals? We know Bank of Canada, okay, inflation, Government of Canada, we know the consumers. What would be the big 5 banks motivation here? Like, what would be their ideal scenario? That rates would continue to go up, pause, or go back down? What's good for their business?
TK, I think that the fair answer is, I don't think they give a shit.
No.
More profit.
More profit.
At the end of the day,
they'll find a way.
They'll find a way.
They're getting paid no matter what.
They're getting paid.
Actually, here from Mark and Vince. So the 5-year fix is the most profitable product for a bank to sell it out of the let's say the basic mortgage products. And I think a lot of Canadians are being forced, or strong armed or guided back into those 2, 3, 5-year rates. We all know that the variable rate took up, I think, 55+% of the market for like 2-3 years there, which was very unlike Canadians. Now we're seeing the big swing back to back to fixed, and likely back into those longer term fixed. Maybe we've been recommending a lot of 2 to 3 years. I'm sure you gentlemen have as well, but. You think that has anything to do with it? A push to get Canadians back into that good old 5-year fixed?
Well, the 5-year tool has always been, 85% of all mortgages are in 5-year terms. That's a flaw in the system, but they built it that way. But the reality is I think the stress test had a lot to do with that, right? Like the big load up in variable products was because people couldn't qualify with the fixed rate. So back in March of 2022, the variable was at 1.7%. The 5-year was at 3.89. So anyone taking a 5-year has to qualify at 5.89, where a variable gives them an edge on a qualification perspective. They're still in the height of these bidding wars and shit, right? So they got to scrape by. Now the perfect play would have been take the variable, close, and lock in.
Yeah.
Okay.
So get the purchasing power on the front end.
Next week,
Lock the deal.
in.
Yeah.
Okay?
Did you have
But here's
any
the
clients
problem.
do that? Was there
But here's the
anybody who did
problem.
that?
Well, here's the
Yeah.
problem.
They're
So
surfing.
but in January, if you did that, you were looking at 135 best variable available versus 269. So someone's sitting there saying, well, fuck, I'm paying 135.
Yeah. You want me to go double it?
Attractive.
Double it?
Yeah.
In March, you're at 170 on a variable or 389. Now I got to go double plus. So everybody got fooled, but they got clues every Bank of Canada hike that things were getting out of whack and inflation's climbing. But the problem is 4 of the big 5 banks
Transitory.
have static payments. And if anybody's followed me, I've been focusing on these static payments because they were the worst fucking product in the history of mortgage products. Okay? They're not designed for when rates go up. So if B20 and all this Basel bullshit talks about maximum amortizations at whatever they say it is, and you're now going backwards on your amortization to 40, 45 with every hike, 52. I saw one at 93 years. Like, that's almost comical.
That is comical.
It's like a U.S. life sentence for murder.
Why would it be? Like, what's the scenario that would happen in? Is it the size of the loan, or is it the
interest rates are going up? The payment you're making doesn't cover enough to
that's an extreme though, right? So like, is that because they were just that low of a rate
until you're upside down?
Yeah.
So all of a sudden, all these banks, TD, BMO, CIBC, and Royal, okay, these are products I would not sell. Anybody that wanted a static payment variable, go somewhere else. Sorry, don't want to talk to you. Don't have time for it. Well, why? Because Scotia's got the best one if you want to be with a big bank. It goes up
adjustable
every time prime goes up. So all of a sudden, you get a fucking notice in the mail, and you're going to call me and say, Vince, my payment just went up. Do you want to lock in? Here's your options. Let's go. Make your decision. Because you have an option to lock in, no cost.
So, but why did people not lock in? Like, there was a nice gap there to, tell me, Mark.
Because you had Scotia, you had everyone saying rates weren't going up that much. That Scotia said 8 hikes in 2 years. People thought, oh, I can handle that. Inflation is sitting at, what was it, 4.7 when the banks still pushed the rate hike. Like we said last year, when they didn't raise rates in January, you had all these experts coming out saying it's not going to be that bad. When you saw where the inflation was going, like, it was everybody, like you saw what was happening, but all the experts said, no, don't worry about it. 8 hikes, that's extreme, that's aggressive. It's not going to happen. And that's all you saw on when you watch Bloomberg, when you watch the Globe and Mail. And they're the ones who said, no, this is going to get bad, they were treated like quacks, like it wasn't going to happen. And that's why no one locked in.
You're absolutely right. And the play in my world was, okay, you're on the phone with a client and they got this notice, right? And I said, well, listen, you can lock in. You can lock in at 419 now. And they're like, well, it's a bit of a premium. I said, well, do this. Why don't you increase your payment as if you're paying 419? Okay, and just pay your mortgage off faster. Get to zero as fast as you can. Because when rates were at record lows, the goal of everybody is to fucking pound down that debt.
Yeah.
Right? Because if you pay it down to less than half of where you were, a hike of double in nature is not going to impact you interest rate wise. And people can't follow that, right? They're not auditory learners, they're visual learners. So you got to get them in here, show them on a whiteboard, show them the numbers. They got to see it.
I don't think most people are showing people this, and I don't think most people are thinking along those lines. I think more people are just like how much do I have to pay every month? And then it just ends there. And then they don't think about like next year's months or the 5 years from now's months. They just like today, like, oh yeah, it's a little over what I planned, but whatever. Like, she wants it, or he wants it, or I want it. Like, let's just
Darryl,
fucking go.
There's a big joke in our industry, right? Home buyers only care about 2 things. What's my payment, and when do I get the keys?
Right.
That's it.
Literally, that's the number one question.
That product, you can tell what the prepayments are, biweekly accelerated. They don't give a shit.
Sure.
They got a moving truck ready. when do I get my keys? What's my payment? Let's go. Where do I sign? Press hard.
Yeah. Number one question I get all the time. Okay, what's the monthly payment on that? I'm like, well, it gets a little more complicated. There's some other things we should be looking at, but no, it's right. It's simple, and again, well, for probably the people listening who are obviously into real estate, into mortgages, investing, etc. But the vast majority of the population isn't, right, and they got caught up in the FOMO and the urgency to get into that market, and the only way to do that was through a variable, maxing your shit out. And I'm kind of paraphrasing from Ben Talley here, but it was front loading all of that activity, right? So you're borrowing like crazy from the future, in a future that a lot of people didn't
look like now. That's for damn sure, right?
Let's think about what's going to happen
till next year.
Every rate hike was the last one. Oh, and that's why people weren't locking in, right? Okay, well, I'm not going to lock in now because this is the last one. So my variable will be fine. It'll go back down. I'm not going to lock into a fixed. Another one comes along. That's the last one. There was a thing on Twitter where it said the last rate hike, and there was boxes drawn all the way around it because they just kept on doing it. So I think that's one of the things. And now we're in that future, and everyone's got to pay for the stuff that they borrowed.
How many mortgage brokers do you think are out there that learned about trigger rates at the same time as their clientele?
100%.
Right?
100%.
None?
I would say 95%.
Yeah.
Not 95% learned at the same time as their clientele. Right. This is a big problem, right?
I saw a TikTok.
Or they believed it could never happen.
Yeah.
Because the speed in which the rate hikes happened basically just threw everybody out of whack. Now, when you don't sell those type of products, it really doesn't come into the discussion, right? There's only one lender in the mortgage broker space that offers it, right? It's TD. And I have one TD client in that static payment, one. And I've told her, it's a shit product. I want you to understand it's a shit product, but she wanted a Porter mortgage. She didn't want to pay a penalty. And I said, okay, but I'm just letting you know, rates are going up. You're going to have a problem.
I see a lot of US content, and they talk about, and this back in the 80s, this happened a lot too, where people would buy down the rate, right? So like there would be incentives and stuff like that. So like sellers would buy down the rate for the buyer to buy their property for $85,000 because it was 14% and they can make it 12. And in the States, they still do that. But I haven't heard of any lenders that offer anything like that.
Some builders are offering discounted rates, whether it's their own funds or they're buying it down.
Yeah, okay. When did you even have to think about doing that?
Yeah, so buying it down, what's that process like? Is that something that would work with every lender?
Well, you're basically providing the lender the cash, the cost of the buy down up front, right? So, brokers do it today. Butler's, he professes it. Friend of Ron's, and he gets an edge in the marketplace because he buys down rates. He doesn't feel he needs to make the top commission. He'll give it back to the client.
The broker buys it down. Okay, yeah. But the buyer, like the seller could buy down the rate. Anybody could buy down the rate with any lender.
But in all fairness, TK, what people are doing is they're just giving them the equivalent of cash, right? Give them cash up front. When you're assuming a mortgage, I don't think you can really fiddle around with the rate. So you're saying, okay, listen, it's at 389. I'll buy it down to 3. The 89 basis points time the remaining term. Here's the cash component. I don't think a lender in Canada is able to buy it down on an assumption, unless it's a brand new mortgage. We haven't gotten to that point yet where these systems can even do it.
The strategies and stuff like that for sellers, right? Just to be able to...
With all the securitization that's involved, I don't even know if they could be put in the pool.
So let me ask you guys, especially Mark, because Mark's pretty visible on YouTube. Like, are you getting a lot of calls now that the end result is like, sorry, I just can't help you? Or like, I might be able to help this guy, but I'm not fucking touching this file for nothing. Like, how is that happening more to you right now?
A lot of tough conversations. Yeah, definitely. I was thinking about this when we were talking earlier about why people didn't lock it in. It was just a few days ago. I got a call from a client who bought back in December of 2021. Big bank pushed him into variable, said things aren't going to go up, maybe 25 points. And he bought right at the height of the market, and like there's nothing he can do. He can't take the payments. He was maxed out. Right. So he maxed out to the top TDS that you can go with, and rates went up for like 400 basis points at the time I talked to him. So there's a lot of conversations like that, which I mean, it sucks. Like it's there's just nothing they can do. These people are stuck. They're gonna have to sell, if they can, depending on how much they put down.
So does everybody like know a guy that like, you know what, like you should call this guy. He might be able to help you out. You know, like, is there a guy for everybody?
You know what, Darryl?
The ones on the marketplace special can help, but
right, yeah, go to
right,
Brampton.
like, yeah, exactly.
You know what, Darryl? I think it's important that everybody sleeps at night, right? Throwing somebody into a lion's den isn't going to help them.
Yeah.
And I think sometimes the tough decisions are the best decisions. And it's ones where you're telling them, listen, there's no hope. Try to protect as much equity as you can for your family.
Yeah.
Find a way to get rid of this thing.
Yeah. So you're telling people, like people are calling you, you're hearing their stories, or you're looking at their file and you're going, you need to sell. Like go get a good agent right now.
Take your lumps.
Yeah.
Take your lumps. Try to protect as much equity as you can, because you're going down a rabbit hole that if refinancing this and going backwards into the alternative space or going backwards into the private space is only going to eat away at your equity, because the lender fees, the broker fees, the legal fees, problems are just going to be so expensive. Just cut bait.
Are we going to start seeing, because like, listen, when conditions change, we start to see new types of lenders. And over the last few years, we saw like private lending, like go to a whole other level, right? And all these mix that started up in the last 3-4 years that are gigantic already. Like, are we going to see a new type of lending come out of this where people are having like interest only loans here in Canada again, and 50-year amortizations? Like, I feel like we're just, at least the people smarter than me seem to be always trying to find a way that people can make those payments on things, right? So is that like the next evolution in things, where we find a way that, yeah, maybe you're not going to pay any principal, but like you can still make the payments at the same level?
This week I got a call from a law firm asking me to be an expert witness in a case of a private lender getting involved in a transaction that probably shouldn't have been involved in. And over the last couple of years, we saw many private lenders come into the space that had no business being in it.
So tell me, hold on, let's back up like one step. What does that look like? They're borrowing from a line of credit, or like, what does this look like?
These are folks that have been told this is easy money. So they're sitting on money in their bank account making zero, right? 20 basis points, 0.25% on a couple $100,000. And somebody's talked them into being a private lender, because you can make 8 or 9%, right? So all of a sudden, I run a MIC, right? So I understand risk, I understand security, I understand how to run a MIC. I've been doing it for years. So I started getting brokers calling me saying, Vince, can you beat this rate? And I said, well, what is it? Well, it's a first for $5.99. $5.99 on a private deal? Nope. I'll sit in cash. The risk premium's not enough to understand that. Well, you're just going up. You can't lose. It's a beautiful house. They're all beautiful. They're all nice.
They're not, yeah.
They're not.
Yeah.
Right? And second mortgages at $8.99, $7.99. Right? So now I got calls from a lawyer saying, Vince, can you be an expert witness? I don't think the duty of care was provided to the investor. And I said, well, did they sign the do you know your client and disclosure document? Because chances are they probably signed something that said that they know what the fuck they're doing. I'll look at it. But the reality is everybody thought they were experts.
But hold on, are you talking about people that privately lent directly to like some other, like a schmuck to a schmuck? Or are you saying like somebody raised money in something and lent it out and people got caught up in that?
And the brokers didn't do their due diligence.
So
the brokers didn't provide the material risk.
So broker, okay. So it's not just like one guy going direct to, hey, you need 200 grand as a second, I'll give it to you, like we were at the cocktails. And then
so all of a sudden, Darryl, you're starting to hear these calls come in. How bad is it? And this lady's out 300 grand, right? In second position, and supposedly she was told it was guaranteed.
Nothing. Of course it's guaranteed.
Guaranteed. You love that.
Nothing's
love when you hear
guaranteed.
that. Yeah.
So like these are the scenarios that are happening, right? So think of, we've been talking about borrowers all the time. Wait till the next fortress avalanche gets through the system of all these private lenders that are out cash. Little moms, orphans, widows that use their state money or whatever cash they had on hand. This whole decade of low rates really screwed all the seniors, right? They worked their whole lives, create little nest eggs. When I started in the bank in 89, 90, while in university, people were getting 10% in interest on their GICs.
Yeah.
So, 300 grand gave $30,000 in income. 15, 20 or 30 years later, they're making 3 grand at 1%. Like, that's a travesty. Seniors got screwed. They're the forgotten citizen out there. Nobody gives a shit about them. We saw that during COVID. Like, they got hammered. And now somebody sold them a bill of goods that they could make money as private lenders, and they're getting screwed again. So this is going to be interesting.
It's going to be interesting because we'll see a big company, like a big lender will drop at some point, right? Not an A, but like a B or a C lender that's got a big book is going to drop. And there's got to be another developer or two out there that are going to drop between Vancouver and Toronto at some point soon. Like, so I mean, I'm hopeful that it's Q2, that things start kind of turning around, but my reality sensor doesn't even see anything getting better anytime soon. And like, I used to be the biggest bull in the world, but like, I go outside and I'm looking at everybody going, what the fuck are you all doing? Why are you guys all still at the mall? Like, how come I can't get a parking spot? How does everybody have so much money to spend? And why aren't you hanging on to it more? Listen, if I go to the mall, it's because I absolutely have to buy something at the mall, right? Like, I'm not going for little things like I used to anymore. And I'm okay. But like, aren't people that aren't okay, like starting to get it, or they just know that they can get a job tomorrow for more money?
Well, next time you're at the mall, see if a lot of people are carrying bags.
Might just be exercising there.
A lot of exercise going on, right?
Yeah.
Window shopping.
A lot of socializing at the malls.
Like, I really like looking at behaviors. Like, I'm in the weeds. I try to make sense of what's going on. I'm not going to profess I know everything. I just look at trends.
But they're ordering in the restaurants, aren't they?
Yeah.
Yeah.
But young people don't own homes, right? They're living in their parents' basements. I got 21, 20, and 18-year-old. Like, one's a university, the other two are working and doing their thing. They're just hanging out. They don't want to be a homeowner. They look at a condo rentals. They say, Dad, like, if I fall down any direction, I'm gonna hit a wall. They're so tiny. I like my spread downstairs in the basement.
Yeah. Have you seen that
room service?
Yeah.
Vince, going back to your point, I think, it's the, guys are people your son's age, as well as the that older generation that kind of, the bookends that really took the hit this time. And I never thought about it like that with the seniors, because everyone always just talks about this massive transfer of wealth, right? The billions and billions, trillions of dollars that are changing hands, and that, just if you just think about that quickly, makes you think, okay, there's a ton of money. The seniors are okay.
It's evaporating in the stock market.
But it's evaporating, right? Exactly.
Worker, right?
I'm a mortgage agent. Yeah.
Oh, you're a mortgage agent. So
Yeah.
let's think about this for a minute. So let's talk about seniors for a minute. And traditionally, they start downsizing and go into assisted living arrangements, retirement homes, whatever the case is, whatever they need, right? So during COVID, that didn't happen.
Mm-hmm.
Everybody hung on to their home because holy shit, people are dying in old age homes. I'm not going into a death trap.
Yeah.
I'm staying home.
Sure.
So at the beginning of COVID, all the service people, which are probably their grandchildren, couldn't afford rent because they weren't making any money. So all of a sudden, mom and dad said, hey, son, why don't you go live with grandma or grandpa because they need a hand. You could live in their basement. You could stay with them for free. And holy shit, their house is going up in value. We're not selling. We're going to keep it in the family.
I mean, millionaires.
Right?
They're never going to need to go to
But
a
all of
nursing
a
home.
sudden, that bucket of people that usually sell and turn over those homes, that's not there anymore.
Yeah.
So we're seeing less listings. Now, I don't know what segment they make up, but this was happening more and more when downtown went dark and everybody left those units. Because remember, there was a lot of vacancy early on downtown at the beginning of COVID. So, where are we going? All I know is this: Aussie's going to clamp down on credit. We're going to see less
That's not good.
appetite for mortgage credit. We
That's
got
bad.
36% of all mortgages in Canada are in variable rates.
Bad.
That's a high number.
45% of all non-mortgage lending is in HELOCs.
That's bad.
And we have 1.1 million mortgages coming up for renewal in 2023. In all of those three categories, the interest cost to service is going to go up more than 2 times, maybe 2.5 times.
Yeah.
But it's okay because there's lots of immigration.
Yeah. There you go. Exactly.
So pre-pandemic, the average new immigrant or new resident rented for 36 months.
Yeah.
Okay, that's basically the rule of thumb before they actually buy a home. And let's say they both, a couple makes 50 grand each. With the less discretionary spending and less household disposable income, how are they going to save? So an average mortgage calculation, it's 4 times income. They qualify for a mortgage. So let's say they make 60 grand each. Household income of 120. They're going to be able to qualify for $480,000 mortgage, plus what they could save in 3 years. How much do you think they're saving? 50 grand?
No, they're called renters. They're called renters for life. This is what's happening. This is like your kid's my kid too. I have a 19-year-old daughter, and it's like owning, unless there's a gift, right? Like owning is so far out of the realm of reality for kids now that just have to start at zero and scratch their way, that it's like it's not even in the realm of possibilities for a lot of people right now. Young kids, it's just like, okay, I'm gonna rent. That's it.
Yeah, what's that do long term, right?
Yeah.
What's that, Mark?
What's that do long term?
What does that do long term?
Yeah, where's the motivation?
It creates a full-blown renters economy, right? Where Dan and I talk about this all the time on the podcast, and I'm sure on the spaces it's come up as well. Late stage housing cycle, right? Like we're 10, 15 years from now, it will be the norm that most people just rent. Right now, I think we're in a bit of a transition period that we haven't fully accepted it yet, but we're being forced into that reality. A couple of decades from now, unless some things majorly change, right? And that goes to several other cans of worms with labor shortages, construction material shortages, supply chain shortages, development cost. You know all about that shit, right? I mean, it's not just, okay, well, we'll do this and it'll fix it. It's no, like there's 10 things that need to be done to fix something.
To even make a dent in fixing something. So
exactly.
Right. And so, I mean, getting enough the supply fix anything anymore. Like that used to be the story. So we just need more supply, but like everything else is so broken. Is supply gonna make a difference? If it was even possible, like there's no fix, right? There's no fix without blowing the whole thing up. Or is there like a way to fix this shit?
Invest in bunk beds.
Bunk beds. Right? No, cages. Have you seen in China, like the little cages in the condos? Everybody gets like a little bed in a cage.
Crazy.
They're beautiful.
Crazy.
They're beautiful.
Yeah.
It's unbelievable. But like, how does this, there has to be a silver lining somewhere. Like we keep saying, we think that maybe they're going to cut rates at some point this year. Which a lot of people agree with. And I hope that that's the case. I really hope that that's the case. But like
I think one solution, and I'm involved in a few projects myself, but I think repurposing of homes is going to be one of the key factors in trying to solve this problem. We got a couple projects downtown. We're turning single family homes into 4 units.
Yeah.
Turning a home into a triplex, put a laneway suite in the back. I think that's going to be the new phenomena that's going to help put a dent in it. I don't think it's the full-born solution, but it's definitely going to...
It's a slow dribble.
It is slow.
Yeah.
Okay, the permitting has been fast-tracked if you're near transit hubs in the city of Toronto. So that bodes well. We went to committee of adjustments for the additional unit. Like it was 15 seconds for an approval. Like
Good. It's
so
good to hear.
they're adding a unit. Let's go bang. Now it took a while to get the meeting date and all that shit.
Can't get a tradesman.
Yeah.
But the thing is, we got 2 side-by-side semis that were 2 shitty little homes, and we turned them into 8 units. And each unit's the smallest one's 823 square feet. So when
affordable housing, you're putting it at affordable rates, correct?
I don't know if it'll be affordable, but
no, it won't be affordable. For
is,
someone, it will be.
Someone can pay for it.
Somebody's mom.
But look at what a 1-bedroom goes for now. Like what is it? It's national average
2200
2400 no
2532 for a 1-bedroom in Toronto. 3 bedrooms 3347.
3347. Can you imagine? My grandparents rented at Bathurst and Bloor 2-bedroom. I don't even think it was a 2-bedroom forever. Like they would be killed by this right now. Like who the hell can afford this? And landlords must be trying to find every way possible to get people to roll over or out of their buildings. No, like the rents on some of these buildings that I've seen for sale are so low. It's crazy.
Yeah.
I don't know how you can make sense of buying them. That's another issue, but like,
listen, I think it's going to be an interesting time. I think as mortgage brokers, we're going to see some slippage in transactions. Average mortgages are going to go down. I think the networks are going to be under some pressure to survive with all their overhead. And I think what everybody's got to come to terms with is you're going to be doing a lot of pro bono work.
Don't you do that already?
Yeah, we do.
More.
Like it's education, it's financial literacy. It's my son always jokes with me. He told me to get off TV a while ago, and he said, "Stop doing TV. Just get on social media and educate." And the best piece of advice he gave me was, "Dad, whatever you do, don't talk about mortgages. Nobody gives a shit about a mortgage.
Yeah.
Everybody cares about how to buy a house.
Yeah.
So teach them how to buy a house. Teach them how to save. Teach them how to budget." And I think financial literacy, as much as that term's been used as ad nauseum, got to really buckle down and focus on that as mortgage brokers and planners, because not everybody understands what's going on. They're too busy trying to make ends meet. They don't even have time to do the math. And we got to help them. We got to do our best to help them out.
I think that's a good way to finish off the show, is just talk to the mortgage brokers who are listening to the show, who are maybe just starting or who are struggling, their business is down, things have changed. Like, what advice can you guys give them to be able to, get through the next 12 months and to be able to help more people?
Find a mentor.
Yeah, that would be, we just had 2 people try to join our team on the East Coast. We're trying to bring someone on, and that was the number one most important thing. I think that's important in anything you do, whether you're starting your own business, go find someone who's done it, whether you're a real estate agent, mortgage agent, anything, appraiser, I don't care, a contractor, go find someone who knows way more than and make yourself very useful to that person.
Yeah, and Nick, I can't stress that enough. You know, a lot of young folks come into this space and I think it's easy. I don't think it's just on the mortgage broker side. It's also on the real estate side.
Even more so probably on the real estate side.
Over the last 5-6 years, people would just bump into people and make money, right? Yeah. So, you know, I've been hammering rookies on my podcast and telling folks, you know, if you want somebody to practice on your mortgage, do it at your own risk, because a lot of people got into shitty products because they didn't know what the fuck they were doing. Yeah. And, you know, I've been in this business long enough that I'm tired of cleaning up people's messes. Ugh. And I'm just being honest, right? Yeah. It's just tiring how people don't do due diligence. There's so much fucking information out there.
Imagine how many buyers ended up with like a shitty agent and then a shitty mortgage agent and
no inspection necessary, like no finance.
Yeah. Their uncle was their inspector.
Yeah. If you're doing a pre-approval, like if you come to my office, you want to do a pre-approval, I want all docs up front.
Yeah.
Everything.
Yeah.
Like I don't even meet with you unless you send me everything up front. Well, Vince, I just want to talk to you. Sorry, there's nothing to talk about. Well, Vince, what's your best rate? I don't know. How much is the yellow car? I have no fucking idea.
Yeah. Check out my podcast.
Yeah. And the thing is, you know, these young people are saying, yeah, how much do you make? Yeah, no problem. You qualify for so much and we'll get a pre-approval at First National. They'll just approve it and get a quick certificate. It means dick. It means nothing.
Yeah.
Right. And then they go in firm because they're in multiple offers.
Yeah. And they pay more than they're allowed, right? They pay more than they've been pre-approved for because they got into a bidding war.
And it's a week before closing, and then they come and see Vince, right? Yeah. Hey, Vince, I saw your show. Can you help me? Okay. Get an extension.
Get an extension. That's the best. That's the best advice for everybody.
Yeah. Why do I gotta get an extension? Because when you need something fast, everything's going to cost a little bit more. Lawyer's going to charge you more, appraiser's going to cost you more, and I'm going to charge you more because you're not an A client. You're going to go in the B world. So get an extension so everybody could work at the right pace. Mm-hmm. Not cleaning up your mess. It's going to be expensive. Mm-hmm. And I'm not trying to be an asshole, right? I'm just telling it the way it is. Should have came to me from the get-go. And if you want a novice to look after your stuff, you know, you get part-time results.
Well, how long does it take to get a mortgage broker's license? Like, what's that process? Isn't that like just a few months online or something?
2-3 weeks.
How long does it take to fog a mirror?
Right. Yeah. It's like
fog a mirror.
It's really crazy, the oversight over this industry when you take like 3 steps back and really look at it. When things are fucked, then you take 3 steps back. But like, I mean,
well, Darryl, we now have the new private lending training, right? So we got to go through this private lending course.
Oh, good. Who's teaching it?
That came about from the Fortress mess 5 years ago. So it took 5 years to come up with a solution to deal with.
And you come out of that Fortress mess and you got people that end up being big consultants in the industry that came out of that bloody disaster and selling out like shows to people. Anyways, that's a whole other topic, and I guess that all of us could probably talk for much longer, and we still can, unless somebody has to go. Or TK, you gotta go. TK has to go sell a house. TK is so busy right now. It's crazy.
Darryl, I want to thank you for the invite.
Yeah, thanks for joining, guys.
It's a true pleasure to participate in these things. You know, I'm just trying to educate, trying to help people think through decisions, and just pause, man. Like if you're in a bidding war, you don't need to be if you're a qualified buyer. Just walk away.
Yeah.
Right.
Yeah.
Qualified buyers right now should be in control. And if you're dealing with a realtor that's not putting you in control, just move on.
What a good time to try and just put like get off market deals going. No, like, don't you think there's got to be people that are like, oh, perfect timing. You know what? I was just thinking, I'm running out of money. This would be great. No.
Quick advancement, guys. We'll get you all back
Take
on the
its
show
time.
again soon. We
Thanks to
appreciate your
everyone,
time.
Yeah.
A lot of amazing
Thanks,
info.
guys.
I think I'm gonna watch this episode again for
Yeah.
like the first time in a while.
Oh, that's the first
just to
time
be
that
able
you
to get-
watch our show.
Just to be able to get all the info.
Let me
back
know what you
over.
think,
You guys
TK.
were awesome. Yeah.
Really appreciate you guys inviting me, Vince, Mark. Great to get face to face time with you guys. You guys are
if
both
you're ever
legends, so
around, drop
appreciate
in
it.
for an espresso.
Thanks, guys.
All right,
Awesome.
we
Yeah,
will.
I'll take you up
Where's
on
it
that,
around?
Vince.
Yeah,
Okay,
we will
take
do
care,
that.
guys.
Thanks,
Enjoy your
guys.
weekend, guys.